Kia ora, and welcome to Monday's Economy Watch, where we follow the economic events and trends that affect Aotearoa. I'm David Chaston, and this is the international edition from interest.co.nz. And today we lead with news. We start the week with current data that's almost certainly not indicative of what's to come. The policy landscape is in ferment. First, in the week ahead, however, locally it'll be all about migration, retail sales, and a second look at 2025 inflation levels. In Australia, their data releases will be all about business and consumer sentiment and industrial production. Elsewhere, India will release a CPI update. Canada's central bank will review its policy rate on Thursday, New Zealand time, and is expected to cut it by 25 basis points to 2.75%. In the US, upcoming updates will be for CPI, PPI, the Michigan Consumer Sentiment Survey, and the January JOLTS data. But first up today, weekend data releases from China confirmed they've slipped into a deflationary funk. Consumer prices fell 0.7% in February from a year ago, 0.5% was expected, and producer prices were down 2.2%, 2.1% was expected. China's consumer price deflation was their first consumer deflation since January 2024, amid fading seasonal demand following the Spring Festival in late January. Food prices fell the most in 13 months, down 3.3%, dragged down by a steep decrease in the cost of vegetables and a sharp slowdown in pork prices. Beef prices are down 13% from a year ago, lamb prices down by 6.6%. Milk prices are down 1.4% on the same basis. China's producer prices are falling faster than consumer prices, but not really at an accelerating rate. Earlier in the weekend, China said its exports rose 2.3% in February, but that was notably less than the 5% rise expected. China's imports fell 8.4% when a 1% rise was expected. That means their merchandise trade balance rose to $170 billion and well above January's $142 billion, and spiked by reactions to US trade and tariff policies. Their data shows a $1.1 billion February deficit in their trade with New Zealand. With Australia, it was an $8.4 billion deficit. We may also get new China yuan loan data at the end of this week, although it is coming a bit later and weaker these past few months. Despite all the US, China and global trade woes, the New York Fed's tracking of global supply chain pressures is reporting a pretty sanguine situation. Of course, that will undoubtedly change going forward. In the US, the February non-farm payrolls report showed the US economy added 151,000 jobs in February, slightly below the 160,000 expected. The January data was revised down, however, to 125,000 from the original 143,000. Their jobless rate ticked up to 4.1%. We should note that virtually none of the DOGE cuts are reflected in this data. Their participation rate fell. The actual unadjusted rise in February from January was 891,000 in this payroll survey data, but that was less than seasonal factors would have usually delivered and less than the 1.065 million gain in the same period in 2024. Including the unincorporated self-employed, the total number of employed people was 162.5 million, and that was less than in January. The shift to company payrolls is still happening, but slower, and the total number of people actually employed actually dropped. Average weekly earnings were up 3.4% from a year ago, and that was their least in more than a year. Over the past 12 months, that rise has averaged 3.7%, so a notable tailing off in February. The US Fed boss Powell talked about the outlook for the US economy over the weekend and commented that they see no reason to be cutting their policy rates anytime soon. The US Fed's tightening process continues, with their balance sheet now down to $6.75 trillion and down by $782 billion in a year and eating into its pandemic surge now. Pre-pandemic, it was a balance sheet equivalent to 19% of US GDP. It peaked at 35.4% in April 2022. Now it's back to 22.5% of GDP. So normalisation looms. For reference, the RBNZ balance sheet is also currently at 22.5% of our GDP. In Canada, their February labour force data wasn't that flash. Full-time employment fell 20,000, while part-time employment rose 21,000. but their average hourly wages rose 4%. Their participation rate fell too, like the US. No one expects this labour force data to improve while the tariff war hostilities build in 2025. And the US President has threatened Canada again, this time with reciprocal tariffs on dairy and timber. If he goes ahead, it'll almost certainly backfire on Americans. Canada is already the US dairy industry's second largest export market, and that market will almost certainly reject US goods. And Canadian timber is well embedded into US house building. Trump wants US national forests harvested to replace Canadian supplies, but that will take time to build volumes and come at a higher price. In Australia, plans to call an April federal election have been shelved, partly because of the expected physical and financial clean-up after Tropical Cyclone Alfred. But there are now still more than 250,000 people without electricity this morning, and the storm is lingering longer than expected, and the flooding heavier. The new expected election date will be sometime in May. There will be a new budget update there in 3 weeks on Tuesday, March 25. In Western Australia, their incumbent Labor government has won a thumping majority, way better than anyone anticipated. Today, the US Treasury 10-year yield is now at 4.30% and down 2 basis points from Saturday at this time. And the price of gold will start today at just over $2,911 an ounce and up $3 from Saturday. Oil prices are just over $67 a barrel in the US, while the international Brent price is just under $70.50 a barrel. And the Kiwi dollar is now at 57.1 US cents and up 10 basis points from Saturday. Against the Aussie, however, we're down 10 basis points at 90.5 Australian cents. Against the euro, we're up 10 basis points at 52.7 euro cents. That all means our trade-weighted index starts today at just over 66.6 and up 20 basis points from Saturday. And the Bitcoin price starts today at $82,620 and down a net 5.6% from Saturday. That all means it has given up all its gains after the US election in November. Volatility over the past 24 hours has been moderate at plus or minus 2.4%. You can find links to the articles mentioned today in our show notes, and you can get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston, and we'll do this again tomorrow.